stay on the jobs report and talk a bit about what we learned, maybe what we didn't learn in this month's report. Nela Richardson joins us now. She's the chief economist over at ADP. And Nela, I want to ask first about momentum, because your ADP report came out Wednesday, 174,000 jobs. I was thinking, okay, we're starting to see some acceleration, re-acceleration maybe in the labor market, but this number kind of shows a flatlining in terms of overall rehiring. How are you thinking about momentum at this stage of the recovery?
It stalled. When we weren't as enthusiastic about our number as many of the commentators were, we thought 174,000 was pretty slow still. It was only good compared to the December loss. This number, though, we expected to be stronger because there was a favorable technical adjustment for those highly sensitive sectors like retail, leisure, and leisure and hospitality. So we expected a boost that we didn't get. We actually saw these three sectors lose about 99,000 jobs in January instead of getting this favorable technical boost. So the bottom line is there is some pain still in the jobs market. Actually, the ADP anticipated a bit of the slowdown because when we looked at large firms, we saw a slowdown in hiring. Large firms tend to dominate leisure and hospitality. So we're seeing these hard hit sectors still struggling to regain momentum even in 2021.
Nela, how much more employment can be unlocked without reopening happening? In other words, in the areas that are growing, how much more can they grow while the rest of the economy remains shut down?
That's a great question, Julie. And if you look at professional services that did see gains this time around, about a good size of those jobs were temporary jobs. So it's not just which sectors are growing, but which jobs are they adding. If they're temporary and contract instead of permanent, then we're not filling that 10 million job deficit with permanent jobs. We're filling it with temporary jobs. That's not the way to get momentum. So vaccination and widespread inoculation is key to a sustainable recovery, but we may need to think a little bit about those hardest hit sectors to provide that lifeline between now and mid-year or late year, because we don't want to wait until the fall to see job gains pick up steam. That needs to happen sooner rather than later.
Just given the jobs increase we did have, in fact, for January, what does GDP look like for the first quarter, and then how might it take shape for the second quarter?
Well, it's an interesting recovery pattern, right? Because GDP so far is outpacing the jobs recovery. And that's because there's been some productivity gains with fewer workers still putting in the work and pushing that economic growth and momentum forward. We've also seen the goods sector actually perform pretty well in this recessionary period. And so on net, the GDP gains are growing faster than the jobs recovery. And you can even see that in the latest Congressional Budget Office report, which shows or forecasts a return to pre-pandemic levels by mid-year this year. The jobs recovery, on the other hand, won't see a full return to pre-pandemic employment levels, according to the CBO, till 2023. So eventually, jobs become a weight and an anchor to jobs growth instead of propelling them forward. And that's why it's key to look for ways to create momentum in the jobs recovery, even as the economy continues to do better.
And, kind of to that dynamic, Nela, I called out at the top that compositional effect of average hourly earnings, higher paid workers keeping their jobs, lower paid workers getting laid off. How concerned are you about that dynamic hardening and policymakers who are more often going to be speaking with folks who are in a white collar type position, executives, so on and so forth? They might think everything is fine or fixed. I went on vacation this summer. It was great. And people forget about what's happening, in the areas of the country that we have, kind of left behind now for several decades, but certainly have forgotten about in the pandemic.
Right. That's 10 million jobs. And you're absolutely right. 10 million jobs that the economy is still short compared to February. And many of those jobs have been low income jobs. And right now, the talk is how to get those low income jobs back, not how to build back better jobs. And that's where I'd like to see more stimulus and thought be put into, is how to create new jobs with higher wages and better benefits. But that's a discussion for another time. Yes, the low income sector is hardest hit. Those are the ones that dominate leisure and hospitality and retail jobs. And so that is going to be key to recovery. And I'll also add, women have been hard hit by this downturn in the jobs market. They have more family responsibilities, and that has left women leaving the jobs market. So again, how do we get women back on the payroll, back looking for jobs? That's going to be a key question as part of this healthy recovery to move forward.
All right, Nela Richardson, Chief Economist over at ADP. Nela, always great to get your thoughts. Thanks so much for joining us on this Jobs Day. I know we will talk soon.